Hey everybody, welcome back. So today I'm going to talk about what happened in the market today, and pretty much because a lot of people have been asking me about it, it's what do I do when the market behaves like it's behaving? And then some people have been asking me, are you buying index funds or are you actually buying regular stocks? So I'm gonna talk about Tesla. I'm gonna focus on Tesla, and I'm gonna put this as an example as a high level. So because I want you to understand, I'm gonna actually detach this guy and I'm gonna make it big so that we can look at it just looking at it, just the graph. Okay, so there's a lot of stuff here that I'm gonna hide, and I'm just simply going to show what study do I have? Day trading. It's a good one, but it has too much crap for you guys. My study for the yearly study. Okay, this is fine. But I'm gonna actually load up the 100 and 200, the same thing I had. So if we look back at Tesla and we look at what it has been doing for the last 3 years. Okay. There's been 3 or 4 times that Tesla has dropped dramatically. Okay. And it is important to keep these things in mind, because this is essentially where people make the mistake. Okay. I don't want to tell you what you got to do. You do whatever you got to do. But I'm telling you what Wall Street don't want you to do, and actually trap you. They trap you. They literally trap people, noobs like the entry-level retail investor, into doing things like this. I have been buying Tesla since it was 700, 750, 700. I started buying when it was 750. And I've been buying 10 shares, 20 shares, little by little, because it has been going down. Some people that I know today ended up selling half of their positions because they were scared that Tesla is going to continue to go down. One of the things that I just got to tell you right now is there's few opportunities in the stocks, and this is in general, it doesn't have to be Tesla, where we have this kind of opportunities. If you're a long-term investor, okay, ignore all the noise. Ignore the people saying, oh, but Musk bought, Bitcoin and this is going to mess up the company. Oh, he's crazy. He's telling, he's making fun of people, with the Tesla shorts. He's calling dicks to the people that tell him that he's stupid because he bought Bitcoin and it's going to mess up their companies. Folks, my recommendation is use these opportunities to your advantage. If you really like the company, again, it doesn't have to be Tesla. It could be any other company. In my opinion, I'm just going to give you this example because I got a bunch of Tesla shares and I like the company. I feel identified as an engineer with Tesla. And I understand what they're doing. And I've been reading their financial statements. I understand their product. I understand the engineering behind everything they're doing and their projections, understanding the technical side of things. Most people don't care. Most people just watch CNBC and they just end up listening to some people on Twitter and whatever, and then they end up buying. Retail investors do that. Most people do that. But I want you to understand that there's few occasions where we see stocks do this. Yes, they've been going up for a long time, but it doesn't mean that the basics and the technicalities that go behind stocks don't repeat. Stocks are, this is all a cycle. When it goes up, it goes down. When it goes up, it goes down. It probably can continue to go down forever and ever, but based on what I've been listening to, based on Tesla's and what they've been doing and how the business is going and how the EV market is going up, I think this is an opportunity to buy more shares. So I just want you to see this graph. This is a yearly chart. Maybe it's very confusing and it has a lot of stuff on it, but you just gotta pay attention to these two lines. I explained this the other day. It's a simple moving average. Ignore the other graphs, and I wish I could just remove all studies. There you go. And I'm just gonna edit it, and I'm just gonna add the simple moving average line, and I'm gonna add two of them, and I'm gonna add one at 100 and the other one at 200. What this means is it's pretty much how much the stocks are gonna move. Okay, I'm gonna edit it. I'm gonna put one on whatever, this color, the other one the other color. Okay, so the 100 moving average is, so in 100 days, okay, how is the price of the stock moving with respect to an average price? So as you can see, it's been moving up, and what people use the two lines is because they usually are indicators that if you bounce on a moving average line or you cross it up or down, it shows you a trend. That's all it means, right? That's why people use these two lines. The 100, it's shorter amount of time, okay? And the 200, it's just more time, okay? One moves faster than the other one. The slopes move faster than the other one based on the amount of dates that you're capturing the data. So it's, like I said, these are indicators, are used for indicating. So what I want to show you is something very important. Depending on where and the time frame that you capture it from, you're gonna get crossings, you're gonna get bounces from the line. And when I say bounces, is like this one right here. It bounced on the 200. This one technically bounced on the 100, and this one, what's happening right now, it's literally a bounce on this one, on the 100, literally straight up. I said it 2 days ago. This was a perfect bounce, and it shows validation of what's gonna happen next, in my opinion. You do your own research, you do your own whatever you do, blah 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 blah. Anyways, my point is, this is a yearly, 1 year, 1 day view, okay, of Tesla. As you can see, stock usually behaves and it trades above the 100 moving average and the 200 moving average. So as you can see right now, Tesla has a 100 moving average point at today's date at 624, and a 200 moving average of 459. What this means is Tesla could easily, it could drop to 458. But if it drops below 458, the technical indicators usually predict that the stock is pretty much done. Something else happened that caused this to inflate and deflate. And therefore, this could cause, this could trigger indicators for people to understand. Basically, this is what I look. I always look at a 1 year, 1 day chart, and I see bounces. If I don't see them clearly, I usually go to the 180 day 4 hour chart. That's half a day. So two bars per day. So you're gonna get more bars. This one clearly indicates a downtrend that's happening in Tesla right now. And the reason why I say this is because if you look, the line has always, the 100 has always been trading on top of the 200. It crossed it one time, but then it recovered back up. This one, it's about, it crossed it today, okay, at 800, okay? But the good thing is that this thing has been going down by a lot, and it could potentially hit 600 again, okay? I'm expecting a bounce. A company like Tesla doesn't always continue to go down. Like, look at this one, right? This one was scary. It was from 539 all the way to 300, almost 50% drop, okay? Right now, we were at 900, and we're looking at 660 right now, okay? That's a 35% drop, okay? It's very important for us to understand these two lines. That's all I can ask you to understand. An average that moves with the stock in different sets of time. Different amount of data get analyzed in a different amount of time. So very simple. It's just what I use. This is the simple moving average in Thinkorswim. You can actually get these lines in any other platform that you have. I use TradingView. TradingView is a very good platform that people use too. And you know, you could look Tesla here, and you could find Tesla, and if you feature the full chart, you could actually see it. You can actually add it. The simple moving average. I'm sorry, that's not it. It's indicators. So simple moving averages. You can add them, and then you can play with it, right? And so this is just what I want to show you. The stocks go up, they go down, they correct themselves, and it's an opportunity for us to come in. How many opportunities we've had with Tesla? How many opportunities we've had with Apple? Let's go to Apple. You know, how many times have we had those down turns, and where, you know, we want to get in and we always get in high, but we never had the chance. In my opinion, this right here, it's a good indication that the stock is going to probably bounce. And if it bounds, it's good. These pullbacks are healthy, and I think that we should take advantage of them. Let me know if you liked the video. Let me know if you still have some questions. I would like to tell you that we're here for the long run. This is not in any means just get rich like this. I don't think it works that way. And for the people that actually post those gains and they brag about like, oh, day trading and this and that, I don't know, man. I look it up with, you know, from very far away when people show up and they start bragging about it, because I don't think it's true. It might be true, but for some people, not for everybody. I don't think this is good for anybody. Okay, so let me know if you got questions, guys. See you later.